Hey everyone, welcome back to part 2 of the strong and weak points videos. So I just kind of want to show you what this looks like in action. So here we have a GU trend, and basically the trend ends here, and here we basically turn bullish. Now, as we keep on going up, our expectation is to continue making new highs. So now we can start building a narrative of which points are likely to fail and which are likely to hold. So if we start looking at this, this takes this high, this now becomes a strong low. Now, if this low is strong, if price revisits this area, chances are this point will hold. So then we have another sort of point here. We take the high here, and we can now assume that this low is strong because it put in a new high. So this allows us to do multiple things. One of the things it will allow us to do is, if you go down time frames on the 15-minute, you would find a trade idea, and you could start setting targets. This would be a target on the 15-minute, this would be a target, and ultimately this is the week high you're planning to run. Now, the reason it's important to note multiple points is nothing in the market's guaranteed, so we always need to have a plan to get paid to continuously extract money out of the market, just in case something happens. Trade management is our way of getting paid no matter what. So again, here we once again take a high, so now our assumption is that this low is strong, and this will likely get a retracement when we break it. Wherever this retracement ends, we can now make an assumption that this high is weak and will be run. And this will continue on for as long as the trend goes. And at some point the trend will fail, and that's totally fine. It's to be expected. But again, as long as the trend continues, we keep following the trend. So here you took the high, this low caused this high to go. This low is strong. Here we actually end up testing this low, and ultimately what we have is this is probably a daily demand zone that we tap into. Obviously the 4-hour didn't get tapped. However, if you're ever wondering why trend needs to break, we'll talk more about that in the liquidity section, but this is all basically liquidity that needed to be wiped so that the trend can continue, and the market will often break a trend in order to do that. So every time that one of these points is created, and we're just going to go up and down the 4-hour, and then we'll do a few examples of the 15-minute. And the reason it's important is I kind of want to show you how to target, and we can also talk about the beginning parts of management. And obviously, we'll get into more detail on management. But for now, our lows are strong, our highs are weak. So at this point here, the low fails. So this low is actually, at this point, this low is actually still strong. And once this low fails, what actually happens is we have a shift, and now this high actually becomes strong because it took out a low. So now the market shifts, and in this essence, what we're looking at now is, now you have a strong high because it took this low. So as we take a trade idea from here, our expectation is that this low will get run. Now, we're obviously very bullish, and the daily would back up your theory. But even though you turned bearish here, you would have two narratives. One is that this trend is to continue bearish, and the other is that this trend is going to reverse and go bullish. This theory is not confirmed till the high is taken. So that high So this low is taken. So at this point, this high is strong. So until this high is actually taken, our narrative remains bearish. So now at this point, we run the high, and we can make a story now that this low is strong and will likely be holding if we test it. And this just plays out over and over and over on every single time frame. And what this allows you to do is allows you to build narratives from what points you want to trade from and which ones you want to target. So if we're forming a trade idea, we want to be trading from these strong points. And we want to be obviously running the weak points once they become weak. So in this case here, once this high gets run, this low becomes strong. So our expectation now is this low to hold. And as long as this low is holding and this high is going, we're going to continue on taking this trend up. Now, we're not going to keep going the whole way with this. What I do want to show you though is how long this trend carries on. And this is months and months of price action, but we're basically, the majority of our trades would have been buys. The pullbacks would have been short. And the buys that are pro higher time frame trend would be your longer trades. At some point, the 4-hour trend has to end. But it doesn't just end for no reason. So here we can see the 4-hour trend eventually fails. So you get your last low that puts in a last high. And this low ultimately fails here. And this high now becomes strong. And our expectation is that this high will stay intact. And we're going to continue taking lows. And we're going to go on a couple of different time frames up above just to show you guys why the trend ended. There's always a why. The trend doesn't just end. So again, you took a low and you now have a strong high. And as long as these lows are getting taken, you have strong highs. So here you have a low that is respected and we don't actually take it. So now we can start building a narrative that this high is maybe becoming weak. And you'll spot this stuff on the 15-minute before the 4-hour, but ultimately it doesn't quite fail there, I don't think. Hold on. Oh yeah, it does too. So we do candle body close above that, and the high goes, here we become bullish again. So now our narrative changes again, and this is strong and this is weak, and our expectation is to continue on going up and running highs. Now I'm just gonna circle this area in blue, and what we're gonna do is go on the daily and and we're gonna show you why this trend ended. For some reason that didn't pop up. That's fine. So this is the area I circled where the trade ended. And what we have here is likely a higher time frame order block that it tapped into. You can see the strong initial rejection. We tapped into the sell to buy wicks. But now you can see this area has been tested once, it's been tested twice, and it ends up holding again. And the reason that the market actually went down here is, again, to create liquidity. It needs that liquidity in order to change direction. And you won't see this narrative on the 4-hour time frame, so where you find it is on the daily. You don't really need to sit on the daily that much. It's just important to know why the trend is ending, what caused it. So if we go up another time frame, what we can see here is on the weekly time frame, you have a strong point. This is the strong high that took this low. So what's likely to happen when the 4-hour or the daily trend hits the strong weekly point? We're likely to get a reaction of some sort and some sort of retracement. Now, at this point it's unknown, but if this area goes and we get a candle body close on the weekly, we could start assuming that maybe this high will go and that we will continue on up. But as of right now, the narrative we have is this is a strong point. This point becomes weaker and weaker as we start running supply zones, and the further we get up the leg, the more of a narrative we could say there's a higher and higher probability that this will get run. Now, something you can notice is even on the weekly, again, we kind of create this little bowl of an area where we pool liquidity and we take it. Now, if you go back to the daily, you'll notice that the market does the exact same thing on every time frame, and basically what it does is it builds all these little bowls where liquidity is stashed and they are cleared. Well, as you're building these on the 4 hour and the daily, there's usually a bigger one built on the weekly and the monthly. The market is fractal. What it does on one time frame, it does on other time frames. Now, just before we end this video, what I want to talk about is the relationship between the 4 hour strong points and the 15-minute strong and weak points. So, by this point, I think you guys get the concept. We want to be trading from strong points away from them towards the weak points. Well, there's my little scribble. Alright, so here we are looking at the points we had marked out. Okay. Or not. Okay, that's fine. So trading view won't go back that far. What we'll do is we'll focus on this section. Anyway, we have our 4 hour strong point right here that takes this weak point. At this point, we expect that to hold, and by going on the daily and the weekly, you could start making an assumption that this weekly supply will likely hold to some extent and see some sort of a pullback, since it's a very strong point and a strong supply. Now, the reason I want to show you the 15-minute is the exact same way the 4 hour functions, the 15 functions. Every time the 15 runs a low, we can classify that as some sort of a strong point. And maybe we'll make this blue. So, at this point, we could say this is strong, and when it's tested over here, it holds, it gets a good reaction. Your liquidity void here. But the expectation is for this point to hold, and as it takes this point. So the 15 told you that we're looking to go bearish long before the 4 hour, and no, we don't expect the 4 hour trend to fail right away, but you start building it with a narrative of a weekly strong point, you can definitely expect some sort of a pullback. And for the most part, you'll get most of your narrative from the 4 hour and the 15-minute. But what we can do with this is understand that right now the 15 is running lows. And every time a low goes, whatever takes out the low becomes strong to some extent. And obviously the higher time frame, like the daily and the 4 hour, is stronger. But at some point, you'll have a strong point such as this one that fails. And at this point, we could start building a narrative that now this point becomes strong because it put in a new high. So every time this high gets run, the low that did it becomes strong and should not be run. And you could see that there would be quite a few trade ideas formed off all of these lows, continuously running these highs until the trend ends and pulls back because of a higher time frame. The idea is to always figure out the direction of the market on the higher time frame, such as 4 hour, figure out if we're pro 4 hour or if we're counter 4 hour. And that's going to give you an idea of how long you can stay in this trade and what's likely to happen. So things do get messy on the 15, but the 15 paired with the 4 hour will start giving you ideas. For example, here you hit a supply. This will likely be a 4-hour supply that you hit. As of right now, you have a strong low because it took the high. Here you take the low. This high becomes strong. This low now becomes weak, and your expectation is that this low should be run. It doesn't have to be run from here. It can react to absolutely anything. But as this low gets run, this high becomes strong. And basically we carry on out building the trade narrative using these ideas. Now here the market does do something a little funky where it closes above that. That'll happen from time to time, and there's always a reason for it. And in this case you have liquidity built here, more or less relatively equal highs, and you have an unmitigated wick. Now what makes this wick so special is you had a supply zone here, and we'll get into this in more detail in other sections, don't worry, but I do want to start bringing the content in to warm you guys up. So here we have an initial reaction point. If you look at the way this formed, we have a bit of a rejection. We can tell this by the candle body closing up above and leaving a wick, which means on a different time frame there will be a candle that reacted to this demand and went up. Now the point of contact that actually took out the reaction point and caused this demand to fail was likely something in this wick. Yes, you could say it started in this wick, but then this wick mitigated that wick, so now what we have is an unmitigated wick that caused this flip zone that turned us bearish, and you have liquidity here. This is what I would consider a very strong zone to trade from. It's with order flow, and our expectation is to right now continue making lows. And you could see that as you followed this narrative, you would have been trading in the same direction for what? 1, 2, 3, 4, 5, 6 days you would have kept shorting that for, until the market shows you something different. And this is obviously reacting to something in the 4-hour zone. And now you have, again, you sweep the lows, sweep the highs, change a character, and ultimately you change direction and you start going this way. So now what we could start assuming is as these highs are going, that the lows are going to be strong and they're going to be great to trade from and continuously target highs. So every time a high goes, we can assume that the lows are going to stay intact and the highs are going to keep going, and we're just going to keep waiting for the trade to come into these areas and trade away from them. And yes, you can obviously play the pullback, but just understand that if you're playing the pullback, you're likely trading from a weaker zone into a stronger zone. And anytime you get near a strong zone, we always want to take profit. So I don't really want to keep beating this over the head over and over and continue on with this video. I think you guys get the concept. The idea is very simple. We want to trade from strong points and we want to run weak points. Now, if you're trading into a strong point, what you want to do is profit. So as we're trading into a strong point, so right here we're once again trading into the weekly zone. We don't know that this weekly zone is going to fail just because it's been mitigated. It is a weekly zone. This is a 4-hour trend. And what I mean by that is you're not going to want to keep taking buys up here over and over and over until this zone actually fails. So as you're trading into a strong point, even though these lows are strong, the higher time frame is stronger than these lows, meaning that you're going to want to pay yourself at these levels because you're not guaranteed to bust through. And as you could see, GU sat here for, I don't know, 2 weeks, and it tried and tried and tried, and it actually, it wasn't able to do it. So each time we failed to basically penetrate this supply, we could start building a narrative that maybe this supply is holding and we're likely to go down. We'll talk about this a little bit. I'll get into this in the liquidity section more, but you could see we build liquidity, we wipe it, we build liquidity again, we wipe it with this wick, liquidity is built, it's wiped, again, liquidity is wiped, and every time liquidity is stacked, they've been wiping it, but they've also gradually been going lower and lower. Now, even though these candle bodies are not closing, we could start making an assumption that, hey, the wicks are reaching lower and lower and lower. And if you actually look at this narrative, and this happens on every time frame, if it's failing to make a higher price, but it's slowly reaching lower and lower and lower, even though we're still bullish at this point, you can actually start building a narrative that, hey, maybe price is going to go down because this supply is holding, and every time these wicks reach, they go slightly lower before price absolutely just dies. Again, I will touch more about that in the liquidity section, but yeah, again, we just continue on following the same principles. We trade from the strong points and we keep running the weak points. This is weak, supply holds, we run it. This is strong, we build a bunch of liquidity in here. As price taps into this zone, we're likely going to take these lows. Again, and this happens over and over and over. This low here does take the highs here, but if you actually look at it, we basically just ended up wiping a bunch of liquidity. And ultimately, this zone is still strong. You haven't penetrated it. So at this point, you drop equal lows, and we're making new lows, making new lows, making new lows. As soon as the highs are holding and the supplies are holding and the demands are failing, we just keep on shorting till it fails. Once shorting fails, we keep on buying till it fails. And at some point, you're going to start seeing more and more momentum to one side than the other. You start seeing big candles like this, and failure to take this high, you could start assuming as soon as this low goes, I would start saying that this low now becomes weak. It's liquidity, it'll likely be run. And look at the size of the downward candles. We came and got the weak low. These lows aren't necessarily weak right away. So at one point, this was a strong low as it took a high. Strong low as it took a high. But once price stalls and demands start failing, if one demand fails, two demand fails, you start building a narrative that maybe these lows are getting weak. That narrative ultimately gets confirmed when the swing point fails. And now our expectation is for the highs to stay intact and the lows to go till the trend no longer continues on. We're going to cut this video here because otherwise I'm going to keep talking forever and put you guys to sleep. But I would suggest getting this concept down. As we move into liquidity and inducement, you'll start understanding how to pair the weak points and the strong points together with liquidity inducement, order flow, and expectation order flow. And ultimately, you start building a narrative of which zones you want to trade from and which zones you don't want to trade from. And we're not here to take every trade we see. We're here to just take the higher quality setups, and we wait for the market to come to us. With what I'm going to show you guys on the 4 hour and the 15 minute, you will likely find a trade every single day in every single session on most pairs. No, not every day, but I would say 4 days a week you're going to find a trade on every pair. So we'll cut this video here, and I will see you guys in the next video.